Yes, sir. It's your boy B Hayes. We back with another one, guys. Before we get into the video, let's give this video a thumbs up. If you're new around here, go ahead and hit subscribe, turn on post notifications so you'll be alerted every time I post a new video. So it's getting close, guys. Let's go ahead and get into the video breakdown, guys, why I believe things is heating up and it's getting very, very close. So we already had a preview, guys, of what's to come. And I know it could be discouraging whenever we have, a nice run up, things is going our way, and then all of a sudden things break back down and we give all those gains back, guys. So this did come as a surprise. I mean, some may think, oh, it did come as a surprise because we've been heavily manipulated and it was only to be expected again. But I guarantee you, more than not, really did think once we had got above that offense defense level at 30 that we was out of here. It wasn't going back to, too much of a low level. Worst case scenario was 23, and that's still giving back hella gains. After running up 33, 34, and coming all the way back to 23, still giving up hella gains, but we expected that, but we didn't expect to reroute, possibly go all the way back down to $14, $15 range. We didn't expect that, guys. So you already know, I look at it as another opportunity, and this opportunity will be even more pressure and demand coming from this level, being for the fact that people already seen what's possible, what's about to happen next. And now they got this second opportunity to double up in a quick instance. So I do believe it'll be even more demand and more people buying at these levels as we continue to come down than it was the first time. Because the first time, many people was losing hope. They didn't believe. They didn't expect the pop to come so quickly, and everybody wasn't in on it. And they was wishing they would have got more. They wishing they would have bought, and now they're having the opportunity to do so as we coming back down. So I do believe a lot more people will rush in at these cheap prices. So let's go ahead and take a look at it, guys. We also know the Feds is doing something to basically put, some crazy fear out there by them tightening their balance sheets at an aggressive rate and also hiking interest rates at the same time. This will cause, some major problems within the stock market and the economy, which not necessarily far as my standpoint, I don't care. Like I told y'all, the war going on, interest rates, inflation, COVID, I don't care about none of that. It ain't nothing but a distraction to keep you blinded and make retail investors sell out their positions while the wealthy continue to eat up those shares while they're cheap and ride it right back up, guys. So we see exactly what's going on. We know all this is just, a fear tactic, a scare tactic to get the majority of the retails up out of there. Because like I told you guys in the previous videos, I always pay attention to how the stock market is operating and moving. Everything will move for the past few months. Everything was moving simultaneously as the market was pulling down. Everything was coming down, every sector, every area. Then when it do get a day where it pop, the whole market pops, start everything green. Then it's back down, everything red. And then just a few weeks ago, we noticed how the stock market got out of that type of state that it was in, meaning everything moving in the same direction. And then the market started, going in mixed signals, sending different areas and different sectors of the market green, other ones consolidating, and other ones going red, meaning coming more into a normal market. Because that's why I say sometimes you got to know as an investor, a trader, whatever it is that you're doing, know how to step away. Cash is a position as well. Know how to step away, observe the market, see what's going on. Then you go, then you figure out what's the move, how the market is operating. Then you start to make your moves, guys, because we noticed, and I brought it to you guys' attention every time it was happening. Everything was moving together. Then when it started breaking up, things started moving differently. We called it out. And also AMC meme stocks supposed to be moving differently from the traditional overall stock market, because news that can bring the stock market down should be able to push meme stocks up, because meme stocks is not being invested in from the fundamental aspects of what's going on in the economy, the world, the fundamental aspects, how the business doing. It don't care about none of that. We all about price action with these meme stocks and a movement and retail investors taking over the float and making the price go up. But they manipulate them because they don't want retail investors picking individual stocks. They want you to buy ETF. They want you to buy mutual funds. They want you to buy things all in one, inclusive. They don't want you individually picking stock with millions and millions of people hurting in, messing up what they got going on. So with that being said, guys, we see exactly the moves and what they're trying to do. And with retail coming in the way they did, it's, it's messing up. In my opinion, it messed up the whole atmosphere of the market. That's why it's being held down still to this day, longer and longer. It had a little few pops looking like it was ready to recover, but they'll come out with, the feds will come out with another narrative to help drive the market down. And that's what we were stating in our previous video as well, how whenever a company, you done seen many a times how Tesla, Apple, any company come out with some great news, and then you see the stock plummeting, coming down. That's because so many people, regular people, retail investors, anticipating on that stock going up because of the news and the algorithm and all that. They know that, so they're gonna drive the price down, pull it back, when it theoretically should be going up from that great news we just heard. Sometimes you can hear some bad news from an individual stock, something that you'll be like, oh, let me short it. This is about to go down. Next thing you know, that stock is skyrocketing and off of bad news. So check me out now. They let that be either or. It could go either or with individual stocks like that, or whenever news from a particular company come out. But whenever the feds, the government come out with some type of narrative to control the market, whatever they say, or whichever they say, if it's good, it's going to always go up for them, whatever direction. If it's bad, the market can always pull back temporarily for them. So make it make sense, guys. And like I said, we should be well prepared for what was to come. What we had just experienced, running from 13, 14 all the way up to that 23 wall, and then shooting straight to $33, $34 range. We expected that. I told you guys, if you've been following the channel, I don't know if you guys remember, but I told you guys last year, whenever we had those big swings right before they happened, right before they started happening on last year, we called it out. And on this year, we told you guys we should experience even bigger swings. We should see, last year we seen like $10, $15 swings. This year I say we should see $20, $30 swings, guys. And that's exactly what we're experiencing already. We ain't even get to where we, trying to go just yet. And that's what that is, from 13, 14 to 33. That's down near a $20 swing to the upside. And then from 33 back down to 14, that's a $20 swing to the downside. And then I'm pretty sure we're going to swing right back up another $20, $25. So that's just my opinion, my take on it, guys. And that's just them big swings like that. That's also come from manipulation. We know that, but also we got to not forget about the psychological aspects of the market. We know so many people is piling in on this for day trades, for quick money in and out. And it would, the way it's been trading, it would really, mess up your psychological aspect standpoints from it, because it's, trading very weirdly. So anyways, guys, I do believe next week we should go ahead and bottom, as long as they don't try to make it come down and pull back very, very slowly like a grandpa on next week. We should go ahead and see some recovery and a real reversal, guys, because we ain't got too much more to go before reaching the bottom. Like, I was wrong. I did think the bottom would be 23, guys, but from looking at it now from this standpoint, we know 18 is after breaking 20, there's no more walls, no more room to fall but to 15. So we could see that $14, $15 again with ease, guys. And you already know, that's all I really got for this video. Just want to give you guys a quick update, share my thoughts, my opinions around AMC, and let you guys know what we expecting. So you already know to be expecting huge moves to the upside, then right back down to the downside. So don't be surprised as we continue to trend up, or if we go higher, we continue to go higher, the bigger the swings will be and the bigger the pullbacks will be, to make sure it try to scare and get all those people out that's just trying to piggyback off of the movement, guys. So you already know, that's all we got. Add your boy on Instagram at The B Hayes Show. I love y'all. We out, and God bless you. We go.